Hello traders, last meeting before Christmas. Welcome on the daily analytical report. My name is Tomasz Wiśniewski and I'm a chief analyst in Alpari Research and Analysis. Well, from this place I would like to first of all wish you Merry Christmas, spend this time with family, have a good, nice, calm few days. Maybe you shouldn't trade now, but we are still here if you want to trade. We are here, we are supporting you, we are giving you nice trading occasions, trading, maybe not signals, but if you follow us on Twitter, you know that we're posting some nice trading ideas. So we are here for you. We're gonna be here for you also in this week between Christmas and New Year's Eve. And now we can start daily analytical report. Obviously, we start this with the calendar. Calendar for today is, as you can see, rather empty. We still have data from housing market in United States and GDP from Canada. As always on Friday, let's take a look what's gonna happen next week. But obviously, as you can expect, no big data. On Monday, most of the instruments will be closed. On Tuesday, just data from Japan, a bit of data from United States, but as you can see, not so important, and it will last till the end of the week. And actually, on Friday, there will be no data whatsoever. At least that which can move the markets, and also many markets will be closed on Friday as well. From existing data, what we can look at is a pack of data from Japan, right? Like, for example, retail trade, like unemployment rate, and data for oil market. EIA crude oil stocks change, and basically that will be it. So we can start analyzing charts from the technical point of view. If there's not much going on the markets, from the fundamental point of view, we can take a look technical, but also nothing really changed from yesterday. Most of the markets are flat. Most of the charts are flat. No major changes. Those trading signals that were available for traders yesterday, they are still available. Nothing new appeared, as I will show you on a chart. So slowly, traders are thinking about dinners with the family than trading. Well, sometimes you need to have a break from charts, and I would say this is the perfect time to do that. But let's go with the instruments I prepared for you. Maybe let's start with WTI and DAX. WTI today is heading lower, but still buy signal is on the table. Why buy signal is on the table? Because we are still above 23.6 Fibonacci of this uptrend, and as you can see, the price is still making higher highs and higher lows. Higher high, higher low, higher high, higher low, higher high, higher low, lower high, but as long as we won't get a lower low, the sentiment is positive here. Well, one can spot head and shoulder formation here, but I'm not so convinced to that. Maybe we can borrow this line, because this inverted head and shoulder is no longer relevant on the markets. This flag is also finished. Correction equality as well. So what we are having here, maybe let me delete that yellow area as well. What we are having here is left shoulder, head, right shoulder, but I'm not so convinced to this formation. But again, it's not up to us to be convinced about formation. When formation happens and all the signals are present on the chart, you just have to trade, right? Do not hesitate. Do not question that if that's a legitimate formation or not. If it happens, it means that the market wants to go up or down, and your job as a trader is to earn money on this movement. As I always say, traders do not have to be right all the time. Traders have to earn money, and it's not always like this comes together, that you're always right when you predict the movement. That's the only way you can earn money. No. You can earn money by listening to the market and sometimes go opposite your own trading ideas or imagination. If you just follow the price and follow the market movements, if you just listen to the market, not yourself. So here, yes, a potential reversal pattern, but just a potential. Don't go short straight away. As it often happens together with head and shoulder formation, we do have a symmetric triangle here. So the price, if we will break the upper line of this formation here, that should trigger buy signal. If we will break the lower line of this formation and 23.6 Fibonacci level, this can trigger sell signal. DAX is maybe this support is no longer relevant, but DAX is closed in a rectangle formation in a sideways trend. If you will see here, that's a typical sideways trend. So not much is happening at the moment. We are having a, maybe let's go like that. We are having a horizontal support here. We are having a horizontal resistance here, and as long as we stay here, and most probably we're gonna stay here today and maybe Tuesday as well, and maybe Wednesday and maybe whole next week. As long as the price stays here, I wouldn't advise anyone to go long or short. What I would suggest is just to wait for a breakout here. Okay, we can switch after WTI oil, after we checked oil and DAX, we can go to the Forex market. And on the Forex market, what we are having here is gold, right? Gold, I was bullish on gold a few months ago. Then the downtrend started. Fair enough. My job as a trader is to close long positions and go with the trend. Now it looks like that. So we have a flag, we have a wedge. Obviously, I don't have to tell you that all of them are trend continuation patterns. So we have a downtrend, flag, downtrend, wedge, downtrend, flag, downtrend, wedge, downtrend, pennant, downtrend. Now we're having a pennant again. You just cannot make that up. That's a beautiful display of price action. That's a beautiful display of trend continuation. And actually, I will use this for educational purposes to show that on webinars and lectures, because it's a perfect example how trend is continued and how trend continuation patterns work, because they do. If you're bullish on gold, you don't have any signals to be bullish on gold right now. At least I cannot see any buy signals here. I would see buy signal once we would break this red downtrend line, which is connecting recent lower highs and is typical for a nice downtrend. So what I would suggest is to wait for a breakout of this line, because also breakout of this line would deny this pennant as a trend continuation pattern. So that would be a false pattern, and that can trigger a nice reversal. We are on $1,100 per ounce level. As you know from the long-term chart, we assumed that $1,100 can be a support here created by this uptrend line, but also if we would connect those lower highs, as you can see, we have a cross of those trend lines here, exactly here on this rectangle. It's $1,100 per ounce. Perfect scenario in a perfect world would be further decline, price declining further 30 pips, $30. Here, trend reversal pattern and a nice upswing. That would happen in a perfect world. We will see if we are living in a perfect world. But we won't find out this year. We should find out in 2017. So if gold is showing us sell signals, a bearish sentiment, what is silver showing us? On silver, you know that this daily candlestick from Tuesday, is it from Tuesday? Yeah. From Tuesday was very promising because it was a hammer on a horizontal support on a daily chart, and this support was very important. As you can see here, it was in February resistance, in March resistance, after breakout, April support, May, end of May, beginning of June support, and now we tested that and we had the hammers here. So that candlestick alone present on this support was a buy signal, but as you can see, it was a false buy signal, as it often happens with trend reversal patterns, right? As you can see, trend likes to be continued. As you can see, trend do not like to be reversed. This support didn't work. This signal didn't work. It was nice double bottom formation, as you can see, with divergences on MACD, also on RSI. So actually, from the technical point of view, everything looked nice, but the buyers didn't hold above this support, very important, $15.95 per ounce. And as long as the price stays below this resistance now, the sentiment is definitely bearish. Once the price will manage to come back above this resistance, one can think about opening short-term long position. But for now, no. For now, it does not look very good for buyers. So I wouldn't go long right now. Those two were mentioned on our trading sniper video that we just published a few minutes ago, half an hour ago on our Twitter. Also, we mentioned there about cable. Cable is falling down as we estimated. We estimated that somewhere here, because there was a correction equality movement, there was bounce from the upper line of the flag. We estimated that 470 pips higher, and actually the price is falling down very nicely. They broke the lower line of the flag. They tested it as a closest resistance. They tested this support, this horizontal support twice. but they couldn't hold that, so that support was broken, and now the way to the next support on 120, 120, 90, 121, let's say 121, is open, and as you can see, it's still 150 pips to this level, so still you can jump in to that trade if you want, if you think that this downswing is sustainable. In our opinion, is. Euro dollar. As you know from our Twitter account, we are wondering if this is double bottom formation labeled with a yellow color supported with divergence of MACD, or this is just a trend continuation pattern, so a flag here. From the movement yesterday, at the end of the European session, when we attacked new daily highs, we made new daily highs, but then price was retraced exactly on the upper line of the flag. Then we broke the lower line of the flag. So this maybe I don't want to say denies the double bottom formation. But this actually activates a flag, which flag is giving you opposite signal than the double bottom formation. And but the market is flat. No traders do not want to start any new movements. So as you can see, price is just floating, and today's daily change, it's 30 pips. So it's actually it's nothing, right? If you compare it to the normal day, 60, 80, even here on a side trend 70, and today we have 30, which is very low. So actually traders, not many traders are on the market right now. No, so even if from the technical point of view we have a significant action here, for the action to be followed, you need to see money on the market. If there's no money because traders are not trading, you won't see market action. Simple as that. So even if technically it looks very promising, from the market reality shows you that for this kind of movements you need money. There's no money on the market, as we said, so we have no movements. Euro to British pound. Here we are fighting on this horizontal support, and here it was defended after a few tries, 1, 2, 3, 4, 5, and then 1, 2, 3, 4, 5, 5 bullish days in a row. Fourth breaks the resistance created by a downtrend line connecting recent lower highs. And as we said yesterday, there were chances that the price would go here, and is actually doing that. So after the breakout yesterday, the price is still advancing higher. When was our webinar yesterday? Somewhere here, right? And now after the webinar where we estimated that the price should go up, the price is 60 pips higher. So everything looks good here. And still have some space, still 30 pips to this level. The next instrument is Australian dollar to American dollar, which is behaving beautifully. What makes me sad is the fact that those types of patterns do not happen very often, and this kind of trading do not happen very often. So a beautiful downswing, beautiful wedge, correcting this trend a little bit, then trend continuation, breakout of this support, and we are aiming close from May. And actually we put this instrument in the newsletter last week for our traders from Nigeria, and it was somewhere here, and we said that the price was aiming those lows from November here, right? And we could assume that there will be some that there should be a support there, so accumulation of buying orders, but there were not whatsoever. The price broke the support and is aiming now lower, and is 100 pips lower, according to our view that we posted both on Twitter and on different trading sites like FX Street, Investing.com, FX Empire. I won't tell you now to which we sent Aussie analysis. But our outlook is still bearish. Every upswing, which is possible, right? Every upswing should be used for selling with better, higher prices. American dollar to Swiss franc is closed in a pennant in a symmetric triangle formation. If you want to trade here, I would wait for a breakout first. American dollar to Canadian dollar aiming this horizontal resistance on 50% Fibonacci. There should be a real test of the sentiment, because, well, as long as here I was bearish, and that's what actually happened here, but this flag is a little bit too long, twice as long as the trend, as initial trend. So it's starting to be a channel up formation, then a flag, which changes trading signal, right? Because if we assume it's a flag is a trend continuation pattern, and in this case we should see a bearish breakout. But if we consider this as a channel up, it means that you should buy and do not wait for a breakout. You should rather wait for a bounce from those lower lines of this formation. In my opinion, as long as we stay below 50% FIBO below this resistance, the sentiment is still bearish, and it's a flag. Once we break this resistance, we can think about this formation as a channel up. Australian dollar to Canadian dollar behaving as it should behave during before Christmas time, because it's in a side trend and it's having a very low volatility. The same happens with euro to Australian dollar, but here we are testing this upper line of this rectangle. As you know, in my opinion, this pair should go down. So actually I could use this high levels for opening a short position, but I don't want to leave anything open for Christmas. It's time to take a break from the market. No point trading here now. But technically, if we would meet this situation, for example, I don't know, in the second week of January, I would think about opening position here very seriously. American dollar to Japanese yen. That was a pennant suggesting that the price should go higher, but is not, and the price broke the lower line of this formation, so the price should go lower. But again, let me remember your Christmas time. This signal is not relevant from the technical point of view, because you have no you have no continuation here, and it's not actually a breakout. The price actually didn't change, so it's hard to call this a breakout if we are on the same levels as yesterday and as 2 days ago, right? So it's not a breakout. Price just escaped from this formation, but didn't choose any direction. So it is not a breakout. New Zealand dollar to Australian dollar is behaving a little bit better than New Zealand dollar to American dollar. Kiwi is behaving a little bit better than Australian dollar to American dollar. but still is going lower. Still we're having a nice downswing here. They stopped for a very flat correction here. Okay, it's a pennant. Pennant is a trend continuation pattern, so we should see this movement continue. Where should we aim? We should aim here to this horizontal support, where still we have 200 pips space for that. 200 pips of potential profit for you. Again, from the technical point of view, this situation looks very sweet for a short trade, but again, I wouldn't open now. Friday before Christmas, it's not the best time for opening positions. Euro to Canadian dollar, what we are having here is a downtrend, head and shoulder formation, this pennant. You see similarity here, actually very big. Head and shoulder formation, breakout of the horizontal support, and a pennant, right? Here. On Euro to Canadian dollar, head and shoulder formation, breakout of a horizontal support, and a pennant. But here, pennant resulted in an upswing. It shouldn't. There should be a downswing, as the price is aiming here. But as you can see, everything can happen. And those setups are really very similar. Very, very similar. And here you had an upswing, but the price is still defending on the horizontal resistance. As long as we won't break those highs from yesterday, we can say that the sentiment is negative. When we will break those lows, especially when we see this nice reversal here, this nice shooting star, we can assume that the sentiment is negative, even with the bullish breakout from the pennant. But as long as we stay below this resistance, the sentiment is negative. When we will break this resistance, the sentiment will be positive. But I'm really amazed how those situations are similar. And maybe if you think about that, maybe you should expect a bullish breakout here on New Zealand dollar to American dollar. But in my opinion, to reverse a trend here, you need a lot of money to be pumped into the markets, and we do not have it. We do not have it now because, again, Christmas time, low liquidity, low volatility. This combination is characteristic for holidays. Okay, guys, I hope you enjoyed this daily analytical report. If you really want to trade on this flat market, I hope you got some nice trading occasions on this webinar. Thank you very much, and again, Merry Christmas, all the best during this time, and see you on Tuesday, Wednesday, Thursday, Friday, on the week between Christmas and New Year's Eve. Market also will be flat, but hopefully we'll find some nice trading occasions. Remember to follow us on Twitter and our website alpari.news. Thanks very much and goodbye.